He is a CNBC contributor. Good to see you back here at Post 9.
Good to be here, Scott.
What would you say the mood is from those that you're talking to in and around the hedge fund world? And, you know, you came from Davos, so you've talked to a lot of people.
I would say bearish. I would say cautious optimism now that there's been a little bit of a rally, but still bearish. And I would say, since you're mentioning Davos, I think that is the big contrary indicator. In 2007, we were growing to the moon. In 2009, we were falling into the earth. And now I think they're decidedly bearish and positioned bearishly, which is probably why we're having this rally.
So what do you make of what's at stake this week? Not only with the big earnings we have, obviously, in tech, but the Fed meeting and the jobs report. What's Powell likely to do?
Well, I mean, for 20 years since the tips came out, we look at the tips and the break even, you know, in terms of the inflation rate. If you go on your data system and just look, it's about 2.33%. That means that the bond market is anticipating 10-year inflation to be approximately 2 to 2.25%. That's good news for the Fed. That gives the Fed some laxity, some room. Do they move twice, 25 and 25? That seems most likely. What they do after that, I think it's anybody's guess. I think that the weird thing about reflexivity, Scott, is the market rally is not helping the Fed. You know, if anything, if the market was weaker, it would give the Fed a little bit more license to lighten up earlier.
Well, I mean,
that's just the way it works.
The bond market,
wealth effect, so to speak.
Sure. The bond market is obviously suggesting it doesn't think the Fed's going to get to where it's talking about going to, and some even foresee a cut coming in calendar year 2023.
Well, you know, listen, I think the market is suggesting that, but we've had these situations before. All of last year, we had the market rallying into the Fed meeting, and then he came out with a 75 basis point rate hike, and then the market traded off.
So you think the market's wrong?
No, I don't necessarily think the market's wrong, but I think we're in a tug-of-war struggle until we get more guidance from the Fed. I think ultimately Dave Tepper's probably right. You know, the Fed is raising. Fed's super concerned about inflation. Don't fight the Fed, but I do think that what everybody's doing is sort of like a match sailing race. If I can get out there a month or two before the Fed and then the market rallies on my positions, that's good news. I think that's what's happening in January.
It's been an interesting beginning of the year for some of the assets that have been rallying. Crypto included in that. The last I saw, what are we at, 23,000 again? And we seem to be anchored at 16 for a while.
Yep.
What's that about? Is that believable in your mind, as bullish as you have been on that space?
Listen,